markets have been more explosive than the cantina menu at Taco Bell when it meets your stomach. We're talking about some serious volatility. There's one piece of information that I think is utterly important to digest, an observation that I've made this week that to me opens up the most important way to view the markets over the next few days and weeks. I believe that we've seen what we need to establish that not only is this bull market about to rip much, much higher, and that we are about to see some entries that we've been waiting for, but most importantly, we've seen a complete skeleton key. The absolute only way to look at this market in 2025, because there's been some seriously fishy business going on, and we're going to pull back the covers and take a look at it. Today, I'm going to be giving you my top coins for the next piece of the bull run and my plan for how I'm going to get the cash that I have on the sidelines into the market. That's right, before we get into this, obviously, I was expecting for things to come back down and give us more entries over the last few weeks into cryptocurrency, and there just simply hasn't been. It's been all gas, no brakes, leading right up to an announcement that we got within the last few hours. That is that we finally will have our first Chinese Buc-ee's location. Well, actually, I'm kidding. That would be a phenomenal outcome of the US-China trade deal. But in reality, what we got was a effective pause to the embargo, the trade embargo of multi-100% tariffs or whatever the heck the number had reached between the United States and China. China lowered their tariffs to 10%, America to 30% for 90 days. But what we really know is that we're effectively getting official news that this trade war is on its way to completely wrapping up. But if you look a little closer, it's my opinion that there were signs, very visible ones, that this was happening for the last few weeks. But given how back and forth the rhetoric out of the Trump administration had been, it was very hard to know when, if at all, we were going to reach a deal with China. Obviously on this channel, we've been expecting for Q2 to be effectively the time where this needs to all wrap up, and we need to now proceed with the super cycle that we've all been promised. But one thing didn't sit right with me. Over the last few weeks, there was no real confirmation besides lip service out of the Trump administration that there was going to be a deal signed. The problem to me is that the official news seems to be way after the actual realities have been leaked. And this is where we get to this theory that was first popularized here by Spencer. Now, Spencer's obviously not a fan of Trump. He's one of the biggest Trump haters. But he said that the way risk assets are ripping relentlessly and gold is selling off, treasuries selling off, seems like big major participants, market participants, hedge funds, Wall Street executives, whom we know have gotten tipped off by the administration before, know what is coming. And that's because if you were just not paying attention to the news cycle at all, just totally ignoring it, and looking at specifically altcoin charts, you could have seen the weakness in December, way before the trade war even got started. You could have seen some of our favorite altcoins, Pepe, Mog, Super, AI coins, you name it. They were falling through the floor like lead balloons, zero bid, zero support. And if you were just looking at the technicals of the chart, it was pretty clear that a storm was brewing. And you could have just made the decision to pull out and wait for calmer waters. Whereas over the last 2 to 3 weeks, we've seen almost an unabated, unapologetic, explosive ripper out of all of our favorite coins and then some. All of the hot coins from Q4 have gone on generational runs, and it's very clear, based on the technicals and based on the charts, that the bid is back. So this leads me to the belief that someone was tipped off, that the actual workings of this trade deal have not been done in a vacuum, and that big major market participants actually know things that we don't. Now, of course, this whole narrative that it's time for Main Street, it's time for the working man, this is all to screw over the investors because they've done so well, now we got to give Main Street their shot. Yeah, this is done, rest in peace. Because not only is pivoting away from tariffs, which was supposed to be for Main Street, effectively giving up on that policy, but definitely tipping off Wall Street insiders is taxes, as well as 1.5 trillion in spending cuts over 10 years, which is $2.5 trillion added to the deficit. And so you take the $170 billion, which is the highest number of savings that we've seen claimed by Doge, and you add a $4 trillion tax bill to it. I mean, realistically, it's 2.5 trillion, but effectively, not only are we not cutting our expenses, but we're spending even more. So as they say, nothing stops this train. Bitcoin and crypto are about to resume their normal posturing in a climate where spending hasn't been cut, jobs have not been clearly onshored, the trade war hasn't really done anything but cause a massive amount of heartache and pain for everyone, certainly messed with my head, and now we have the entries being given to Wall Street hedge funds before we actually learn about the news. And so when we look at this Bitcoin chart, it really tells the story. You had this double bottom, and then you pretty much did not have market structure even break at all. You just had this grind up of price action without any kind of meaningful wicks below here, pretty much from 74K all the way up until here. The first time that we broke market structure and actually made a sort of significant deviation lower was right after this, which of course is exactly the moment when the Trump administration formally announced that there was going to be a trade deal with China. So we get this announcement here, we get a little peak above the range highs here around 105, just under 106K, and then immediately start selling off, which to me is a textbook buy the rumor, sell the news type of setup, where the rumor and the actual information about this trade deal was being leaked out way in advance of the actual reality hard details. And while that is crypto in a nutshell, it does bring up the point, which is if you had completely ignored the entire news cycle over the last few months, you would have been better off. You could have just sold the weakness on altcoins and bought back into the strength as soon as the altcoins started coming back with turbo bids. It wasn't hard to see, but it was so confusing given how bad the news cycle was as the market was ripping and how good the news cycle was as the market was dumping. The news really had me screwed up. That brings me to a few points of how I'm going to be adjusting my trading going forward based on the way that this Trump administration is working. There's a few key observations here. One, the Trump administration ties to corporate America are way stronger than he was pretending. Like, obviously, he's not going to screw over corporate America. This whole Trump that's going to sign the Bitcoin chart, sign the S&P 500 chart, sort of claim the gains of the stock market, and really be that markets-driven guy. Yeah, that's the Trump that we have, and he's kind of giving up on this total reorganization of global trade. Two, a lot of the things that were troubling us about what could potentially derail this whole Bitcoin and crypto supercycle, those are being more or less removed from the reality. They're being removed from the equation. And we can see that the next 4 years will pretty much be a story, in my opinion, of Bitcoin adoption as a treasury asset and crypto being adopted and used for more and more serious things while the entire economy sort of swings around like a meme. We'll talk about the implications of that in just a minute. But even when it comes to other pieces of the policy like mass deportations, they're actually deporting less people than Biden administration's final year, obviously way less than Obama or Trump 1.0. So we're seeing a lot of the core policies here. And again, this is not a knock. The point of this isn't to talk about anything other than the price of cryptocurrency and how we're going to trade around it. But what's very clear is that the news cycle and the prices are pretty much divorced because the real buying and selling, the real action is happening right there on the charts, and you do not need this news cycle except to give you a little bit of confluence. When I'm looking at the news cycle, I'm going to start by looking at the charts. If there's weakness in the charts, I'm going to assume that there's some kind of weakness that we haven't heard about yet. There's strength in the charts, I'm going to assume that things are going well behind the scenes and that somebody somewhere knows something. Now, the good news here is that tariffs, which are more or less getting reduced to that 10% number, potentially less over time, are pretty much going to give Jerome Powell the green light he needs to cut rates. So we'll see loosening conditions. We've seen a lot of the most problematic policies that Trump was going to bring to the table, the most troubling ones for the markets, have sort of been chewed through, digested, and we can look forward to, in my opinion, a lot more stability and clarity where we get to see crypto continue to eat away at financial assets. While it's not the start that we had imagined, this is feeling like we're going to enter into that golden age of cryptocurrency. With that said, I've also been pretty objective with myself. I was losing my cool at the extremes of this price action because, quite frankly, I was totally overexposed. I had like 97% of my assets in the world riding around in cryptocurrency, and it was driving me insane. So even as I get cash back off the sidelines into this market, I'm probably just going to keep a little bit on the sidelines to keep myself being more objective because I care way more about getting it right, about doing my best work. And I realized that the emotion I was going through, that fear that I had from having so much exposure in the markets, drove me to make less than objective decisions. So I'm going to keep a little more cash on the sideline just to be more objective, just to see things as clearly as possible. With that said, let's get to the main event here. This has been one of the hardest trending market moves that I can even remember. It's honestly incredible. I mean, this is from 74K to 104K, a $30,000 move on Bitcoin without really taking a breath. Pretty incredible stuff. And as you can see, it broke through the April 2nd, the Liberation Day market structure level here at 87K roughly. And then we also broke through this bearish retest structure, this breakdown level at around 96K. Those are really, really big levels. We also have this level here at 90K or 91K about, which was the sort of weekly higher low that we actually broke through. That was when the downtrend really accelerated. So again, obviously every time I've asked the market for a dip, it has not obliged. So if you're holding and you're long, you're welcome. But this does feel a little bit different. Again, I'm not getting too aggressive here, but it does feel like the trade kind of played out of buying the lows and expecting to fix the problem he created with the whole trade war. And now we trade more or less back up to similar levels that Bitcoin was at. again, now that that stimulus has worn off, what you want to see is that if Bitcoin does come down, which I do think is possible, if Bitcoin does come down, you want to see it hold and bounce off of some of these more significant levels here, whether it's this mid-90s thousands, whether it's this breakdown level from February, whether it's the 90,000s, or in my opinion, this is a pretty significant level that you got to hold, which is this Liberation Day, Tariff Day, that high that was created there, that effectively once we broke back above, you could see it was just like gas to the upside. All right, I give up. It's time to capitulate on waiting for this dip, which probably means that it's gonna come as soon as I do this. The reality is I would absolutely never forgive myself if I missed out with really any meaningful amount of dry powder on this next part of the bull run. That said, I am going to be keeping a little bit more cash on the sideline, as I'll talk about a little later on this video, just to stay more objective so I don't get emotional at the very extreme parts of the market. But this strength after the tariff stuff has resolved is undeniable, and it's very obvious that we're getting that last piece of the bull run, and so many coins are still, in my opinion, so cheap from where they will be going once Bitcoin dominance drops and this market rolls over. So I'm injecting about 40% of my dry powder, despite the fact that I'm expecting a dip here still. I'm injecting some dry powder here just so that I am not feeling totally sidelined, and I am welcoming the bull fully back into my heart, and you can expect degenerate bullio trades.
I didn't even know they had to buy crypto, but
rocketing up $60 in one day. This is an absolutely insane development. Incredible for crypto, incredible for Coinbase holders, and just good for the whole space. This is phenomenal, phenomenal, phenomenal. Just to be clear, I'm not a psycho here. If we break to new highs, if we just blast off and we just say, you know what, screw Elio trades, we're not gonna give them an entry, we're just gonna keep pumping, and the market just decides to go for brand new all-time highs, I'm buying this. I'm buying a brand new break to all-time high. There's no question that I'm gonna throw cash in once we get to that level. So that's my invalidation. I hope it doesn't happen. I hope I get better prices, but I'm no fool. If Bitcoin is making new highs and breaking into price discovery after all of the macro headwinds have been cleared, then I'm very excited, and we will get that last moment of the bull run, the final party that we've been waiting for. Something that's pretty shocking is that throughout this entire period, this move from 73K or 74K all the way up to 100K, there's been 0 new YouTube subscribers. This is across not just my channel, but every YouTube channel, courtesy of Enter the Cryptoverse. And as you can see here, there's been very few new Twitter followers. More or less, the social signals around crypto are ice cold. There is no retail mania. This isn't a retail-driven phenomenon. This is just the people who we're locked in here with, you know? You're locked in here with us, and apparently the institutions. But of course, at one point, there will be a change of pace. And I believe we may have started to see the beginning of that change of pace with something pretty important that happened this week. And that, my friends, is the return of ETH against Bitcoin. Now, of course, this kind of a move has happened before. It's not completely unprecedented, but I don't know, something in my loins, it just feels a little different. It feels like this is the type of behavior that leads into a more relaxed, more altcoin-focused part of the bull run. And when you look at ETH USD, I mean, it's already broken back above this trend line, right? It had this trend line from, the rest of pretty much this entire cycle. It bottomed right off this low of 1400, and now it's way above a lot of the horizontals and even this diagonal support line. It's a monster move out of ETH. It pretty much doubled. That is an insane move out of Ethereum. And we're even seeing Google Trends for Ethereum misspelled, spiking, signaling, of course, retail investors. I mean, obviously institutions know how to spell it. So this kind of brings up one of those theories that we had, which is, of course, nobody really owns Bitcoin. We talk about owning Bitcoin, but people don't buy it because it's so expensive. You think, oh, $100,000, I don't want a little fraction, a little bit of dust of Bitcoin. I want to own a whole coin. And people feel like, probably even since the entire last bull run, most people felt like Bitcoin was too expensive for them. So what did they buy? They bought 2 main coins that I think, as they start to pump, will really bring back that retail attention. We haven't talked about this in a while, but the first coin that they bought was Ethereum, because they were using ETH to buy NFTs. Remember, the meme coin run of last cycle was all NFT based, and you needed ETH to play. The second coin that they bought was Dogecoin. So as Bitcoin has ripped, the fact that Ethereum hasn't ripped and Dogecoin hasn't really ripped, those are the coins that the old retail class are probably holding, and as they start to come back to life, will probably signal a massive new wave of retail excitement. So again, I'm gonna go out here on a ledge and say, unless Bitcoin really shits the bed here and makes new lows, I think we've probably seen the lows for Ethereum, and then I'm excited to see if Ethereum can start really getting some momentum back. As you know, My biggest holding that I split evenly between Bitcoin, Ethereum, Solana, 20% each, and then I have a bunch of crypto stocks that tend to track pretty well with Bitcoin. But finally, that ETH bucket is starting to feel like it's a decent investment. Next up, we have Hyperliquid, which, at $24, again, it's up a lot. Obviously, if it comes back and it revisits this sort of $18 pivot point, that would be an amazing re-entry. But probably, I don't know if it's going to give that, maybe $20. If you're not in Hyperliquid, that would probably be the next entry here. There's quite a bit of price support around this level here. But again, the buys that we made on Hyperliquid in the bad times, those aged pretty well, pretty happy about that. And more importantly, the product's great. Using the product is just phenomenal. One of the biggest coins that I sold, and this was because of the Libra rug and the Trump coin stuff, I sold Solana kind of frustratingly because I was so disheartened with the way that the meme coin ecosystem was behaving. And that was around $200 there or about. Solana's about 172, and so I definitely want to get back into Solana here with some of that cash. That was one of my biggest major holdings that I sold, and it's still below, significantly below, despite the ripper, where I sold it. And so on this next higher low, I plan to re-enter Solana again. I do think that what I've seen is that the trenches, this sort of new meme coin game, is more or less still completely dead, and I think that's a beautiful, beautiful and good thing. The longer it stays dead, the better it is for the ecosystem, and probably when it starts heating up again, that's probably a good signal that it might be time to start taking some profits. That's just my opinion, is that their hottest moments corresponded with effectively the times that you wanted to be selling everything. Now, without a doubt, some of the strongest coins from the bottom have actually been meme coins. You could say, okay, this is just a mean reversion bounce, whatever you want to call it. But I think when you actually couple together the fact that there's so many problems that we've kind of given up on solving with the Trump administration's pivot away from Doge. And again, I know the comments are going to say they're not pivoting away from Doge, but let's be honest. We were expecting Elon to come and slash $2 trillion. We were expecting to onshore some American manufacturing. Those policies haven't exactly really shown any progress. And of course, it's brand new. There's still time. But I think that people are still now getting comfortable again with this kind of meme-based economy. And so it's not surprising that people are now turning back into some of the hottest memes that have attention, mindshare, liquidity, and they are going absolutely bananas. So it would be irresponsible of me not to be real and just say, look, these are the coins that have been hotter than any other coin. You have Fart coin going up 7 over 8x, right? 700%.